Hello and welcome everyone to the week ahead commodity report, where we will be reviewing the markets for the 18th to the 22nd of June 2018, presented by myself, Phil Carr, at the Gold and Silver Club. Now, the biggest question I'm getting after the price action this week is whether now is the time to be buying commodities. So I want to explore that with you a little bit further, because essentially after the moves that we've seen this week with the FOMC statement and also the European Central Bank, we have seen a considerable move here to the downside on Friday with gold, with copper, with platinum, with palladium, with silver, and also oil having significant moves lower. In terms of the moves here we've seen on Friday, gold broke down to 5.5-month lows, silver sold off over 3% to the downside, copper broke down to 2-week lows on Friday, clocking its biggest weekly loss since April. Oil prices too sold off more than 3% on Friday, breaking down $2 per barrel, which now totals a 9% decline in oil prices over the past 4 weeks. So of course the question here is, when is it going to be a good time to buy, or should you be selling into these moves as well? Are you looking to capitalize on the sell short side too? So let's have a quick rundown of some of the market action that we've seen over the last few days. First of all, we'll go over to copper. We mentioned this on last week's report that we were looking to establish a sell short position on copper throughout this week. Copper essentially last week, prior to the FOMC statement, broke out to 3.5-month highs, and we've been selling into this move. We've in fact established 2 positions over the last week on copper, which have now come out of those positions and bank profits here on Friday, as we've had quite a significant decline here, over a 4.7% move to the downside here with copper over the last 3 days in particular, where we've seen a breakdown following on from Wednesday's FOMC statement. And of course the big story here is really the capitulation that we saw on the US dollar here, which has rallied by over 1.3% over the last week, particularly after the European Central Bank announcement on Thursday. And this is essentially where we've seen a retest and a breakout back towards the November swing highs here as well. So the US dollar here has continued this momentum and overall upward trend. And now as we go into next week, we are at a major decision point here for the dollar, and of course the impact that can have on a number of commodities and also currencies as well. We saw the euro sell off significantly last week as well, following on from Thursday's European Central Bank announcement. So let's move over to some of the trade opportunities that I believe you should have on your radar going to next week. With regard to the metals, platinum is again back within this accumulation zone, back below $900. I would definitely keep an eye on platinum. The 2 levels that I'm looking at the moment, one of those resides at $881, and also the next level resides at $869. We've done very well with the recent breakouts here, and we look to be on the verge of a breakout this week. In fact, after the FOMC statement, we've taken profits off the table with platinum, so we're flat again with this market, and we're actually looking to re-establish a long position if we get a reasonable bounce at a major layer of support. So I would look at platinum on the weekly chart. Bear in mind that we're coming all the way back towards the 2-year lows here, so we're starting to move back towards the 880 to 870 zone, which is a level that I'm looking for evidence here that we will get support. We might see some more downside at the beginning of next week. I wouldn't be surprised to see a little bit more momentum here to the downside for platinum. Current key levels that I'm looking at would be $880 and also below that $869. Possibly if we really get a washout here on platinum, we may even break down towards about $850. But I'm looking out for the potential reversals at this zone. So anywhere really below $900, I'm looking for evidence of a reversal. You could look to sell short into this market, but you're looking to sell short into a lot of support, and I would rather be selling short a market like copper, which has the potential for still more downside, in fact, as we go into next week, rather than trying to sell short platinum right at the lows. Now let's move over to gold and also silver as well. In fact, I'll show you the price action here on silver. Silver, luckily we hit our profit target here on the upside above $17 per ounce over the course of this week, prior to this large sell-off to the downside. So silver's move here to the downside on Friday has been significant. It's given back about 2 weeks of gains. It's broken down 3.49%. In terms of the gold to silver ratio, I was just checking that before today's week ahead report. We're not at a point where it's suggesting it's immediately going to turn around, so we could still get a bit more vulnerability to silver price going into next week. And I perceive again the buy zone with silver right now still resides down at approximately $16 per ounce. That would be the key level. I would be looking at a potential reversal, but when you get these flush outs in the market, sometimes they can continue to follow through more than you might expect. Sometimes we can take out key levels of support until we get capitulation moves. Now, it could be at the beginning of next week that silver does get supported and immediately starts to retrace. We've come into some support here around $16.50 per ounce. You can see here where we're just bouncing. So next week will be an important decision point for silver, but it gives rise again to some potential good opportunities to re-establish positions if you've not had any trades on, certainly some longer term positioning as well, bearing in mind that we've seen quite a significant correction here on gold, on silver, and usually what we see with the metals is they bottom out over the summer and then they start to build up some momentum as we get into the wedding season in Asia, which typically starts to take place in Q3. Now with that, let's just go back to gold. So a few points to note here on gold. First of all, we closed here on Friday at 1,278 US dollars per ounce. So gold has essentially broken down to 5.5-month lows. Gold tried last week to break and close above 1,300 US dollars per ounce. We saw that after the FOMC statement on Wednesday, this breakout. On Thursday, we had some additional follow through. What was really interesting was after the European Central Bank conference on Thursday, the US dollar absolutely soared, and yet gold was still closing above 1,300 US dollars, and it was a really delayed reaction here on Friday. We had a false breakout to the upside. Gold at the peak there broke out to $1,309, but just did not follow through. We came into a lot of resistance here, and you can see on Friday we've just seen gold dumped essentially, and it's broken down 1.8%, and it's now back at the monthly pivot, just holding some support around that level at the moment. With gold, we could see another flush out at the beginning of next week. The sell-off might not be over yet. It really depends on whether this layer of support holds going into next week, so whether gold bounces and starts to retrace off 1,278 US dollars per ounce. But if it rolls over and takes out Friday's lows, the price structure would be vulnerable, first of all, for a retest of 1,265 US dollars. And if we continue to see follow through to the downside, even potentially 1,260 US dollars per ounce could be tested as well. Now, again, it might be that gold prices hold at the beginning of next week, and we do see a retracement after quite a significant fall to the downside on Friday. But I would just keep an eye out for the potential for another round of selling here too. Now, again, you could be looking to sell into a move if we were to break back below Friday's lows. You just need to be very nimble here, because when we're at these levels at the lower end of the Keltner channels, in particular with gold, it can be very fast to get a bid, and you don't want to get on the wrong side of selling short gold when it is getting oversold, because it can very quickly capitulate in the opposite direction. So I would just keep an eye on gold price action here. I don't think it will be too long until there's going to be a really good buy opportunity again here with gold, currently sitting at 1,278 US dollars per ounce. We'll be watching the price action here very closely of gold at the beginning of next week. In terms of the overall net long position on gold at the moment, hedge funds and money managers did raise their net long positions in COMEX gold and silver last week as well. So we saw that quite clearly from the net long position and the change in that data. That data does actually marry up with the breakouts that we saw at the beginning of the week, where we had silver breaking out to 2.5-month highs and gold also breaking out back above 1,300 US dollars. It's only really at the end of the week that we've seen this big move lower. That is certainly very clear on silver, where we've seen a significant decline here in prices. But we'll see whether that holds next week, whether we do get a retracement or whether silver just wants to roll over and revisit the lower end of this recent channel, which will be residing approximately about $16 to $16.25 per ounce. So I would definitely be watching gold, silver, platinum very closely next week. I still see the potential for more downside on copper. We've squared up with some profits here on Friday because it's been very fast, the profits that we've gained here over the course of Thursday and Friday. We've seen over a 2% decline and a 4.7% decline on the week here, but I would look at the potential for copper if it breaks back below Friday's low. We've really got clean air here until we come back down towards the next monthly pivot as well. So we might look to re-establish a position on copper next week. It depends how we move off the open here and how the price structure is looking at the beginning of the week too. And then of course we want to go over to oil. So we do have the OPEC meeting, which is taking place next Friday, the 22nd of June, which will be of course a major news item in your trading calendar. For those of you who trade in crude oil, you want to pay a lot of attention to the OPEC meeting on Friday. So what do you need to know on oil going into next week? We have seen a decrease again in the net long positions from hedge funds and money managers cutting positions again on US crude oil. On Friday, we had the Baker Hughes oil rig count, which showed an addition of 1 oil rig, and that's the 4th consecutive week of increases now, which of course lent additional pressure to the downside here for oil. Oil did break down on Friday over 3%, $2 a barrel to the downside, after 2 of the world's biggest producers indicated they might increase output at next week's OPEC meeting. For the last week, the stats on crude oil are Brent crude oil breaking down by over 4% and WTI crude oil breaking down 1.3%. Oil investors are, of course, all waiting for next week's OPEC summit in Vienna, where Saudi Arabia and Russia have already boosted production modestly and have indicated they are prepared to increase output at that meeting. So the question, of course, now is whether that has been priced into the market with the recent 9% move to the downside. Has it already been priced in, or are we going to see further declines in the lead up to next Friday's OPEC meeting? If we have a look at WTI crude oil, we're at a very key level and a decision point here going into next week. We've essentially come all the way back down to revisit the monthly pivot, which we've seen this level hold previously on 2 occasions now. We've seen the weekly pivot, which resides at $64.25 per barrel, hold, and we've seen a bounce off that level, and we've halted with the price. It's very common here for oil to move really well off major pivot points, and we've seen the price hold spot on at that level into the close on Friday. So what I'm looking out for as we go into next week is whether we will retrace and whether we will bounce from this zone if traders are essentially going to buy this dip in crude oil prices from the decline on Friday, or whether we're going to see a breakdown of the monthly pivot, and this could lead to, of course, more significant moves, in which case if we were to break through this major level, and let's say we break back below $64 per barrel, the next zone of support I would look at is $63.75 per barrel. If we break through that, my expectation would be that we should shoot back towards a 200-day moving average, which resides around $62.50 per barrel. So if we were to take out the recent swing low, a more significant breakdown in price, taking us back down to the next key level here of $62.50 per barrel, which is about a $2 move from where we reside at the moment. On the flip side, of course, for that, if oil holds at this level, there is quite a lot of potential upside still if it just consolidates. It might well just consolidate next week, because a lot of traders just wait for the OPEC meeting on Friday and they wait to take on fresh positions until we get more clarity. So we'll see what happens here. But of course, the potential upside here for a recovery after a 9% move to the downside over the last 4 weeks is quite significant. Also, if we are already seeing it priced in. So that's what we want to watch out for as we go into next week on crude oil. Now, of course, if you'd like to find out more about the training services that we provide at the Gold and Silver Club and get access to our custom-built market data and news trading platform, there is a link below in the description that will give you a 1-month free trial of our news feed. So you can find out more about that in the link in the description to this video. And also, if you'd like to join us for the live trading rooms next week as we prepare for the OPEC meeting, all you need to do is go to www.jointhelivetradingroom.com. The link is also below this video in the description. If you enjoyed the video today, make sure you hit the like button and also subscribe to our YouTube channel. That way you will be kept updated with the latest commodity reports.